Let's a couple other things. So this is our report that we use, that we do a payroll every 2 weeks. And so this was from 2013. And we had changed to a time and billing system, different system at the first of that year. So I actually didn't see this data until the middle of April of 2013. And remember, I told you that I knew already that we needed to be at $2.25 during tax season and $1.80 outside of tax season. When I got this report on 213, I had seen that tax season to us starts in January. So that first one is a holiday week. It shouldn't have been that low, but it's like, okay. Well, the next week was 1.1, next week was 1.6, and we're 2 weeks into February, and we're at $1.72. I'm going, what? I mean, I already knew what was going on. We had two people that were causing a significant disruption. One was a new hire, the other one was kind of a repositioned role, and I mean, and they were just sucking the life out of the business. And so when I got this report, I fired one on a Friday, one on a Monday. And then took about a week to get everything repositioned, and immediately we go back to $2.24 productivity, you know, the next full 2 week cycle after they're gone. Keep in mind that there's the same available work to be done in both of these periods. We produced 88,000 in that time period. We produced 136,000 in that time period. I'm telling you, bad labor is a cancer. It sucks the life out of your business, and that's why you cannot tolerate it. Because we had 2 less people and produced $50,000 more in a 2 week cycle. Those 2 people were costing me $25,000 a week in lost productivity. Can you afford that? I mean, our business isn't unique that way. Yours works the same way. So it's an enormous difference. So this is another example I went through with the guys last night that I think is important. So keep this as big as possible. Yep. So a lot of times when I'm working with a business, I take their data and I'm looking for patterns. So once I take their data, get it into this model, then I'm looking back and saying, when were they successful and when were they not? And what were you doing when you were successful? And how do we get back there? Well, this particular business, you can see that they actually didn't have any profits. There was actually a year prior to that they lost money as well. How do you stay in business if you don't have profits? The bank's not going to finance you, so it's not bank funding. What else? Investors, absolutely. Do you think investors are happy when they see losses, 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 losses? Do they think that they're going to get their money back? No, they're not happy campers. So I go in there and I'm looking at this, scratching my head going, man, what am I going to do? I actually had a client that was in this similar industry, so I had an idea. So the idea is we want to first get them profitable with the business that they have. So we just plug in, okay, so let's assume that, let's take the $6 million that you got. How can we get you there? I'm also going to assume that everybody always tells me, oh, well, we're giving up some margin in our cost of goods sold. And I go, no, you're not. I mean, until you prove it to me, I'm not trusting you. It's going to be roughly the same number. So I'm plugging in that number until they prove it's different. So I went with, so I know it's not that. Direct labor efficiency, they've been at $1.84, $1.94, $1.93. I got to just take a wild. I had another client in the industry that I'm going, I'm going to guess that I'm just going to plug in $2.50 for right now until we play with the rest of the numbers. Facilities, they're not going to change. They'd already cut their facility. They'd already moved into smaller space, so it's going to be the same number, 165,000. Marketing. In times of challenge, do not stop spending money on marketing or else you will die. Because you have to market. Now, be efficient, get more value out of it, get more resonance for the marketing dollars that you're spending. But you have to keep on marketing or else you are going to cease to exist. It's just a fundamental fact. Management labor, they'd already riffed everybody they could, so looking at their team structure, they might need different people, but I concluded that that salary number was about what they could live with. So if I can get them, all things being equal, to just get direct labor efficiency to $2.50, I can get them to almost 7.5% profit. I go, well, but there's no pattern of that being possible, except that we actually had their data by customer, and so when I looked at their data by customer, they had 16 contracts, and when I sorted it in descending order by labor efficiency, lo and behold, I have 4 contracts up here that are at better than 2.5 labor efficiency. So when I get there, we have this discussion, and I go, well, just kind of interesting looking at the data. Why is it that those 4 are better than 2.5 and the others aren't? And they said, well, that's interesting. We bid them all the same way. Amazing. This is the power of why you never, ever mix labor with something that's not labor. Because they had, before this, mixed cost of goods sold with direct labor. Now, it's all direct cost. I mean, that's what the accountant said. Well, yeah, it is, but they're dissimilar cost. And so you should never mix them. And so by separating them out, we were able to isolate the fact that everybody below those top 4 were being overserved. Do your employees sometimes give things away to your customers that they don't bill for? They do it all the time. They're giving away your money. Now, you might want them to do it, but let's make sure that there's a real strategy behind that. Because I've got people that I trade with as a vendor that give me stuff that I don't ask for all the time. And it makes that employee feel good, but was it their money? No, not at all. But they're feeling empowered, and I'm all for empowering them to serve the customer, but they've got to have the context of whether or not that customer is profitable. Do I want to be over-serving customer 11 that we're making a 1.0 labor efficiency? No. I got to find a way to do it instead of, if I'm going to change one thing, I either have to charge the customer $470,000 instead of $189,000, or I've got to cut their labor to $75,000 for the $189,000 that they're going to pay us. It's one of the two. If you want this level of service, let's reprice it. Otherwise, I'm going to have to staff it for the level of service that we contracted to do in the first place. And be careful to overserve when that's not what you charge for. Everybody get that? So, I mean, that's a classic example. Today, a year later, I had to do the investor call. You know what their labor efficiency was 1 year later? Because I did this first meeting with them in February of that year. So what is their labor efficiency a year later? 2.5. And they hit that profit number, and their investors were mildly happy of seeing some success. But, yeah.
Back up to grasp all of this. So my business is similar to this. So you have a customer, you see the revenue, see the cost of goods sold, see the gross profit. The direct labor might not be one. Is that direct labor just for that client?
Yeah.
And how, in a situation where the whole team is working on that?
Yeah, I mean, not every business can get to this level of granular detail. We consider this what we call the profit cube. So I can take a business and look at the business in total like this. But like the landscaping company I was telling you about, I can take the business engine section, and the business engine, I'm not trying to get facilities, marketing, and all this stuff, or the operating expenses. I'm not trying to get that by customer. That's the chassis of the business. I want to be able to get revenue down to contribution margin either by customer, by line of business, by location, by division, what other methods that I have of allocation. If I can't get it to those levels, then I just live with it at the overall level and use my instincts to know how effective is the team working. I know labor efficiency for my business by customer, by line of business. We have 4 lines of business: consulting, tax, accounting and auditing, and outsourcing. So I know it by those types of service codes, I know it by employee, and I know it by customer. And the best labor efficiency ratio that we get on anything we do is actually outsourcing, because it's sold as a staffing contract. So, right? Everybody grasp that? Let's see if there's one other before we wrap up here. One thing I mentioned last night, most of you don't like looking at the balance sheet. I really want you to look at the balance sheet, and so we've come up with a simple numbers view of it that's a little bit different. Instead of accountants being happy that I got assets over here that balance to liabilities and capital over here, and we feel good that the 2 numbers equal, it doesn't really help you that much because it's not very analytical. And we think this is the analytical way of looking at it, is we take your current assets and current liabilities, put them together as what we call net working assets. And so I want to be tracking, are you building net working assets in the business? This net structural assets are the fixed assets that you own minus any associated debt to those. And then this business had unassociated debt because they bought out some shareholders, so that debt isn't associated with any other aspect of the business. And then equity is the final number. So the goal is you got to build a healthy business, in that process. So in the question that we had over here, talking about once you're profitable, well, here's the 4 forces of cash flow. So once you're profitable, these are in the exact opposite order, because most of you want to take distributions first. We might leave a little bit of money in the business, but I really don't want to repay the debt, and I certainly don't want to pay taxes. Well, it's the other way around. I got to pay taxes first. I got to get out of debt second. I got to build some working capital to get to my core capital target third. And then once I've done those 3, now I've got a business that I can harvest. I can milk the cow. And the cow's healthy. So the first thing is on taxes. So we take the responsibility. Once a quarter, we're meeting with the client. We run a tax calculation of what money they need to set aside. We get it out of their hands because we do not trust you. That's the only way to do it. Now, we don't send it to the IRS until the last possible moment that does not cause a penalty. And there's a couple of different techniques of when to send them the money. But sending the money is a separate discussion that I don't need to bore you with the technicalities of that. But I do need to just get the money out of your hands every quarter and set it aside in a tax savings account, and that's not counted. We generally want you to be on the cash basis if you can qualify for the cash basis, unless in the rare circumstance that you were paid well in advance of performing any of those services, and then we will look at the other options available. Most businesses that do not hold inventory can qualify for the cash basis. And there is, all of you are S corporations or LLCs. There is no size limit for being cash basis at the present time as an S or an LLC. You could be $200 million in revenue and be cash basis. So I like the cash basis approach because it matches the cash to the taxes to the cash as you earn it. And so it's much easier to manage in that regard. So it's important in that regard. Debt management, I'm okay with you having a line of credit. I just want it to be 0. And so use your line of credit when you are growing profitably, but do not use your line of credit when you're losing money. You make different business decisions when you're losing money to fund losses. I want you to first quit taking a paycheck maybe, or secondly, make those expense cutting decisions, don't draw on the line of credit. One of the successful techniques that I'll write about in the next book in managing your line of credit is, if you have a line of credit, use it just like a factoring company would. I'm specifically drawing and paying back based on specific invoices rather than just a nebulous balance that's on the line of credit. So each week when I set my cash position, I'm picking the invoices that allow me to draw that much money against my line of credit. And then as those customers pay me, I'm using that money to pay down against the line the following week. And then I got to go draw back the next week. And yeah, it's a little bit of effort, but it's going to cause you to be more diligent about managing that line of credit correctly. And so we think it's a very important discipline, to do that. Long-term debt, I'm okay with borrowing on structured debt on fixed assets that are productive. So if you have production vehicles, long-term equipment, those things in your business, I don't want you using your cash unless you're totally out of debt otherwise. I don't want you, spending money to buy a vehicle, to buy a significant piece of equipment or something like that. But just don't go crazy with it, and make sure hold that asset accountable to being productive in the process. This is the most powerful concept, though, that we've seen, is this idea of when am I healthy? And so it's a simple calculation, what we call the core capital target. I don't have to be a balance sheet wizard to figure this out. I need 2 months of operating expenses. So those chassis expenses I was discussing earlier, the operating expenses, my operating expenses plus direct labor is a month's worth of operating expenses, because I generally don't count cost of goods sold because I usually have terms for those vendors. But my employees, I haven't gotten them to give me terms yet. I keep talking to them about getting 45 days, and they just don't seem to be engaged with that idea. So I gotta have money for my direct labor and my operating expenses. If I have 2 months worth of that in cash, 0 drawn on the line of credit, I'm what I consider fully capitalized. And I've yet to see a business that didn't work for. Now, it may surprise you how much money that is, but I'm telling you, when you've got cash, you have leverage in the marketplace. In 2008 and 2009, when everybody else was going through a so-called recession, my clients were making money hand over fist because they bought into this. They had no debt. They weren't necessarily growing significantly. A few of them grew a little bit, but it was the two of the most profitable years. 2008, 9, and 10 were some of the most profitable years that any of them had seen, because they were the only game in town in a lot of cases that were still hanging in there. So that's the reason why you do it. The beauty of this is when you get to this piece. So I've distributed the money for taxes. We've gotten out of debt. We're sitting in our quarterly session, and we're going over your cash. And so if your core capital target is, say, $200,000, and you got $300,000 in cash, and the taxes have been taken out, you got $100,000 that you can take that the taxes have been paid on. It's free money. And so I ask you 3 questions. First question is there something I can spend $100,000 on in the business that I would make back more than $100,000 within a 6 to 18 month period? And if the answer to that is no, is there something I need to continue accumulating cash within the business for? Maybe it's something that $100,000 wouldn't do it, but $250,000 would. Maybe I want to develop some software or something like that. All right, so you keep saving money for that. If the answer to the second question is no, then the third question is, we're going to take the $100,000 out of the business, and we then start to look to you as a person. And the first thing I want you to do as a person is get out of debt, which, oh, by the way, does include your house. Your house that has debt on it is dead. Do not think that owning a home mortgage interest is a tax benefit. It is not. To stop interest expense is to make interest income. So I want you to be debt-free. There's a bigger reason than just the yield on it, because you're going to get the math types that, oh, well, I can make 8% in the market, or maybe 15, or, you know, it's like, stop it. What you're going, you cannot buy the peace of mind of having a debt-free personal residence. That the market cannot give you that. And I'm batting 1,000 on this one. Every client who I've convinced to pay off their house, they've come back and said, I thought you were nuts when you told me to do it, because everybody else said I was crazy to do it. And I said, but that's the best thing I've ever done. And so that's step one. Step two is, for most entrepreneurs, I want you to have $1 to $2 million of liquid, accessible, investable funds. Because the man who has access to cash has a lot of opportunities. And it's about having free access to cash that you can be opportunistic at the right moment, whether it's another business, a piece of property, you know, another investment. I mean, who knows? I mean, we've seen all kinds. But it's the people who have cash who get more of it. And so you want to have that base of cash. Anything above that $2 million is what we call the juvenile delinquent fund. I mean, just risk it, do whatever. Risk it with the only caveat that you cannot leverage it. It cannot have debt associated with it, because debt leaks back into everything else. And so that's where people go wrong when you have economic turmoil. And we will have economic turmoil, because just to give you a point of reference, remember Greece? Everybody talked about Greece was, you know, going to sink the Eurozone and all that. We were concerned about Greece when their country debt to GDP was 93%. You realize the U.S. has over 100% of debt to GDP right now? Our country debt is well in excess of our annual GDP. It's going to be bad. It's just a question of when. My guess is we're going to have economic and political chaos in 2016. So I'd be getting some hay in the barn right now. I mean, that's a guess, because nobody knows. But we're kicking this can down the road as far as we can kick it. But there's a point that we're not going to be able to kick it any farther. And you better have your house in order at that time. So I would have a high sense of urgency of being profitable as quickly as possible. So one of the last things I'll show you is, this is the software that I had mentioned earlier. So one of the things that we wanted to make it simple is more people to have access to an easy ability to put your data in this format. And so within the next 2 months, we should be releasing this for the QuickBooks desktop versions. Anything that's Pro or Enterprise. Right now it doesn't work. We don't have it set up for the online version. But if you've got the desktop, it should work. But essentially, this is the dashboard page. And it's what we want you to focus on is, we think these are the important things. And these are user-defined levels of red, green, yellow. So you can go in there and set your own as to what the levels should be. But, you know, profitability, revenue, gross margin, and gross margin dollars. I don't care about gross margin percentage. I can't spend percentages, but I can spend dollars. And so we want you to set gross margin targets, is what we believe is the real important one. Operating expenses as a percent of revenues, direct labor efficiency ratio, management labor efficiency, and then days of core capital. Then on the P&L, it puts your P&L in the format that we've looked at today. There's a little drop box here that I can toggle between rolling 12, rolling 6, rolling 3, and monthly. And so essentially I look at rolling 12 data. To me, is each one of these columns represents 12 months of information. And so to us, that is the most authoritative trend of your business. If you've done some things differently than you were doing a year ago, then you want the ability to look at rolling 6. We like rolling 6 because if you pay payroll every 2 weeks, there's an extra paycheck month twice a year. On rolling 6, I filtered out the distortion that extra payday month causes. I've also filtered out all the distortion in the rolling 12, because every column has 12 months, 4 seasons, 2 payday periods, and all that kind of jazz. So that makes it more comparable. For rolling 3, we look at, for near-term trends, that if you've made some short-term strategic decisions, what do those quarters look like? Also, if you're kind of a quarterly seasonal business, it gives you some ideas that you can compare that. So it's just a quick way to grab that data and hold yourself accountable. The balance sheet, we've got the simple numbers version. There's also a toggle that you can toggle to the traditional view of the balance sheet as well, but we want people to look at this. And so down at the bottom, it calculates your cash basis income as well as your core capital targets. So all that data is on the balance sheet as well. And then this is your company settings where you can set, there's a slider for some of them are hard dollar input, but that's essentially how to work. And then all you end up doing is you just have to bucket your accounts one time. And so it's a simple interface to pick an account and put it, you only get 8 of those buckets to put it in. And so it's got to fit in one of those. And then we'll offer an inexpensive service. If you don't feel comfortable bucketing them yourselves, we can do it for you. And then we can also offer an hour-and-a-half call to go over the data with it as well. So we think this is something that, we have our regular clients that we work with, but, we want to put this tool out there, and hopefully there'll be some other accountants that'll use it as well. But essentially we want to make this available and get it out there. Cross our fingers and hope it works. All indications are it does. But differently than a lot of tools are in data, there's a lot of tools available to have you that'll help you extract your data, but they don't tell you how to work with it. And our mission is to help entrepreneurs that go, hey, I'm not a financial expert. Tell me how to read this information and make it usable. So anyway, if you go to simplenumbers.me, there's the recent blog I wrote that we didn't have time to talk about today, but I think it's an important thing of how you get live data. And so I went through a process that you can share with your internal bookkeeper and your accountant, whoever's handling your bookkeeping. This is how you have live data week to week to week. And so if you complete an accounting cycle every week and you work off of a weekly rhythm, you'll never have to worry about closing a month. I mean, if you're, somebody was telling me that they don't have their data since last April. I mean, that's a travesty. I mean, how can you manage your business? I mean, when we get to the week that has the first day of the month, we just hit print, and the data's live. But the key is you got to figure out what the bottlenecks are and who's not doing their part of it. So I go through kind of the elements of how do you handle daily deposits, how do you handle invoicing, how do you handle paying vendors, how do you handle credit cards, how do you handle online banking issues. And there's a process, and don't make it harder than what it really is. I mean, before I started my own practice, I was a controller for a $140 million bank, and this was back in the dark ages when PCs were just coming on the scene. And we went from delivering bad data the day of the board meeting to I had the board package done by noon of the first day of the month. So it can be done. You just have to plan for it in that process. And you got to commit the resources to do it, but it shouldn't be expensive either. It's less expensive to do a weekly process than to make it inefficient and try to do it after the cow's already left the barn. It's too late to shut the gate. So you're just making it harder than what it has to be. Okay, and then the next book hopefully will be out by the end of the year. I'm in the process of writing it. I keep finding reasons to get interrupted and not write as often as I should, but I'm a couple of chapters into it. But it'll be an update to the previous one. So with that, any questions before we wrap up? The P&L comparison one is, that template is out there. The others are, it's actually, live client data, so I can't put those out there in the public domain. One of the advantages of having clients all over the country is I can kind of talk about it and nobody knows who they are because they don't know where they are. I mean, we've kind of gone from, what's really kind of interesting is, 2001, all of our clients were in Huntsville, Alabama, and today, 25% of our revenue is in Huntsville. The rest of it's all over the country and the world, and starting to get some clients outside of the country now too. So it's kind of fun. I mean, and I would encourage you. I mean, it took joining the Entrepreneurs Organization and certainly organizations like this. Think bigger. I mean, I would have just been a Huntsville, Alabama CPA had I not joined EO. Well, I think the same thing is available to you guys being parts of these kinds of organizations is think bigger. Because, you know, if you're doing something valuable and necessary and useful, the world needs it. I mean, you don't have to just think about Louisiana or Alexandria. I mean, like I said, we've got clients from Boston to Seattle to Canada to Bahrain to Latin America. You know, I don't even speak Spanish. I mean, so, but you know, everybody does something useful, and so just think about how big of a reach you could have. So, all right. So with that, all right. Thank you.